good evening, students. Hello, good evening. Can you hear me? Am I audible?
Yes, madam.
Okay, we can start the session. So last 2 weeks, last week I did some calculations for individual taxation and company taxation. So I think you have, or for you all, those calculations are very clear. So if you have any questions regarding those calculations, you can ask now. After that we can start the partnership taxation. So it is somewhat different from two computations, but all applicable provisions, that means mainly deduction rules, are completely the same. So therefore it is nothing to worry about the partnership taxation, but some changes are there, some differences are there. Do you have any questions regarding previous sessions? Okay, then let's start. So what is the meaning of a partnership? It is also a type of business arrangement. So we are doing our businesses, our activities in different way. Some are doing their businesses by themselves. That means we call it sole proprietorship. Alone he can do his business without support from any partner or any shareholder. He can do it by himself. Companies are some completely different thing. It is a legal body. So to become a company, it should be listed in the under Companies Act. It should be incorporated under Companies Act. So it is a legal body. So it has a legal identification. That means company is treated as a legal body. But partnership is a different thing. Partnership does not have that kind of legality, but it means not only one person but more than one person. There should be at least two to start a partnership. Therefore, we have a specific definition in that for partnership under section 195. So it is clear we have definitions under section 195. For partnership also we have a definition. It says partnership means that means only thing we have to consider as a partnership. Other than the wordings in this definition we cannot use. So partnership means an association of two or more individuals or corporations. That means it can be either an individuals or corporations. Together it can be a partnership. Carrying on business jointly for the purpose of making profit. So they are doing their business for making a profit. So what is the main thing? There should be two or more individuals or corporations. That means alone anyone cannot form a partnership. So there should be two or more individuals or corporations. Then there should be a purpose. The purpose is making profit and it is a joint business. Irrespective of whether the association is recorded in writing. So there should not be a definite arrangement, agreement. Without having agreement or not, or it can be oral agreement, it can be written agreement. It is not necessary to have a written agreement, but with the oral agreement they can start a partnership. So what we normally we have, if we are considering individual, if we are considering company, then we have residency and non-residency principle. That means that individual can be a resident or non-resident. Same as company also can be a resident company or a non-resident company. Same as Partnership also can be a resident partnership or a non-resident partnership. So when I'm explaining the residency rules, at that time I explain what are the most important criteria to become a resident partnership. So a partnership shall be resident in Sri Lanka for a year of assessment if only if it was formed in Sri Lanka. That means if that partnership is formed in Sri Lanka, that means that partnership is a resident partnership. Or at any time during the year, the management and control of the affairs of the partnership are exercised in Sri Lanka. So sometimes it is not in Sri Lanka, but the management and control of the partnership exercised in Sri Lanka. Then also it can be considered resident partnership. So you know the differences between residents and non-residents, and importance of identifying whether it is a resident one or non-resident one. Then we have specific provisions under section 53 as well as for others, but for individuals and companies we have some part of some provisions, but in addition to that we have specific provisions for partnership income taxation also. So partnership income taxation, we have section 53. Under that section 53 we have some amendments. For that section 53 we made some amendments. So therefore I have mentioned here from January 1st 2020. That means prior to that date different provisions were applied, but after January 1st 2020 partnerships are liable to pay income tax separately from their partners at the rate specified in paragraph 2 of the first schedule. That means then it implies that prior to this date partnerships were not liable to pay income taxes. Yes, that is true. So this implies that prior to this date no income taxes applicable for partnerships. Why? Because prior to this date we had to calculate partnership assessable income. Then based on that amount we had to pay withholding tax at the 6% withholding tax rate on that income. But after January 1st 2020 all partnerships are liable to pay income tax separately from their partners. So it is a completely different provision. So now tax as well as individuals and companies, partnerships also calculate their assessable income from business, investment and other income sources. Then the partnership can apply qualifying payments. Reliefs are not applicable for partnerships. I think you can remember only individuals are entitled for the deduction of reliefs. So entities are not entitled for reliefs. Entities include partnerships and companies, but they are entitled to deduct qualifying. When we are deducting qualifying payments, we had two situations. One is an individual's qualifying payment and entities qualifying payment. So this is applicable for entity qualifying payment provisions for this kind of partnerships. Applicable qualifying payments are qualifying payments specifications, that means limitations provided for companies. Then partnership income or loss must be allocated to partners. That means partnership, we have to calculate partnership tax liability by applying that things, that means assessable income, then taxable income. After that, to that taxable income we have to apply relevant tax rates. That is why it says specified in paragraph 2 of the first schedule. So you know, in the first schedule we can see applicable tax rates for individuals, partnerships, companies, unit trust, NGOs and all other entities. So it says to apply tax rates to partnerships, that is if their taxable income exceeds more than 1 million, then only they are liable to pay taxes, because up to 1 million taxable income applicable tax rate is 0, as I explained last time also. So for the balance part it is 6%. So I will explain it later again. Then after that they have to pay taxes on calculated according to that formula, tax rates. So when we are calculating partnership income or loss, it must be allocated to partners according to the provisions of the Act. That means after calculating assessable income of that partnership, even though we are calculating partnership's tax liability, we have to allocate to partners not the taxable income but the assessable income. So after we are calculating assessable income of the business of that partnership, that should be allocated to partners, and investment also should be allocated to each partners. Then we have to calculate partners' tax liability separately, because partnership is not a legal entity. Therefore, even though we calculate partnership's tax liability, after calculating that partnership's tax liability, partnership separately should pay income tax for partnership and capital gain tax also. After paying that taxes, the partnership share of profit should be allocated to there may be 2 or more partners. So we have to allocate that partnership profit or loss into that partners. After that, we have to consider that income as partners' income. So I have already explained how to calculate individual income tax liability. This is as same as the partners' tax liability. So when we are identifying individuals' business income, investment income like that, partnership income of that partner also should be identified separately. Any income, expenses, assets or liabilities held or incurred, any income, expenditure, assets and liability held or incurred jointly by partners are treated as those of the partnership, not the individual partners. That means all assets and liabilities are jointly incurred things should be considered as those are partnerships, assets, liabilities, income or expenses, not the individual partners. Such assets and liabilities are considered acquired or incurred when they begin to be held or owned jointly, and realized when no longer held or owned jointly. All business activities of a partnership are treated as part of a single business. That means there may be several businesses by a partnership, but all income should be considered as a single business activity. There may be several businesses. All business activities should be considered as a single business activity. For an example, when we are calculating individuals or companies' tax liability, I have mentioned several business types. In the last computations, I included foreign income source, foreign income from, I think it is for individual or a company. I think it is for company. When we are doing company taxation, I included foreign income. So that is a separate business. Web designing, I think you can remember, web designing for foreigners. So that is a foreign income. So for that part, we had to apply specific income tax rate, that is 15%. But if a partnership also doing that, even though the partnership is doing that kind of separate businesses, we have to treat all businesses as a one single business activity. Therefore, when we are applying tax rates, we have to apply one income tax rate, because we cannot apply concessionary income tax rates or other tax rates to partnerships. So partnership has only one income tax rate. That is why it says all big business activities of a partnership are treated as part of a single business, even though they are engaging in several business activities, several types. If that kind of businesses are doing by individual or company, sometimes applicable tax rates are different. But if that kind of businesses are doing by a partnership, then applicable tax rate is only one. Then agreements between the partnership and its partners are generally recognized. That means normally we consider all agreements between partnerships and its partners are separately, but except for loans from a partner and interest paid on them. That means if a partner provided a loan to the partnership, for that loan the partnership can pay interest to that partner. Sometimes services can be rendered by a partner, and partner may receive some service fee, including employment. That means partners are providing their employment service to partnership. Then partnership pays salaries to that partner. But when we are calculating partnership income tax liability, we cannot allow to deduct that kind of expenses. So that is why when we are calculating partnership tax liability, first of all we consider business profit. Then business profit, that means business profit in the accounting purpose, prepared in the accounts as per the accounting profit. This is accounting profit. So to that accounting profit, we have to add partner's service fee. That means if a partner provides some service to partnership, and partnership pays service fees. So in the hands of that partnership, it is an expenditure. Normally you can think that it is a deductible expenditure because that is incurred in the production of partnership income. That is how I explained section 10 and section 11. So according to section 11, expenses incurred in the production of income can be deducted. But specifically mentioned in the partnership provisions, service fees and salaries cannot be deducted if that is paid to that partner. That means if I am a partner, I can deduct lot of expenses as paid to me. Me means partner. So that means it will be an arrangement to reduce their profit. Therefore, payments made to the partner mainly as a service fee, including salary, and as interest on the loans provided to that partnership are not deductible. Therefore, we should add back that kind of expenses to the profit to be calculated as assessable income from business. So now I think you can clearly understand what I have already explained. If at least two partners remain after a change, so this is section, so I am explaining sections 53 and 54. We have in our Inland Revenue Act has in 3 languages. So if you have any issue, you can read that act, because this is just in a summary form. මතක තියාගන්න මේ presentation වලට දාන්නේ summary form එකෙන්, but for your purpose, your tax purpose, when you are doing some tax calculations, at that time don't refer this. This is only to only because using these slides you can identify what is the provision relevant for this kind of calculation. That is why I have already provided, but it is necessary to read act when you are doing your activities, when you are doing your duty in the organization, or when you are calculating your tax liability, then you have to read act also. So read section 53 and 54. It says, if at least two partners remain after a change, that means there may be some changes in the partnership. Sometimes when they are forming their partnership, there may be four partners. But after several years, they can change their partnership. Sometimes they can remove 3 of the partners out of that 4. Sometimes they can remove 2 of the partners out of that 4. So if still 2 partners are remaining after that change, then we can consider that partnership is still the same entity. That means previous 2 partners are still there after change their partnership composition. Then also we can consider the same partner as it is a same partnership. Otherwise we have to dissolve that partnership and we have to start a new partnership. Each partner is responsible for fulfilling the partnership's tax obligations. So this is also very important. Partners cannot say, any partner cannot say, I am not responsible for the tax liability of the partnership, like that, because each partner, all partners in the organization is responsible for fulfilling the partnership's tax liability. The partnership income for a year of assessment includes all income from its business, investment or other sources. Similarly, any loss for that year refers to losses from the partnership's business or investment. That means any investment in business income and investment income of that partnership, and business loss and investment loss also can be treated as that partnership's income or loss. So that when we are calculating the assessable income from business or investment or other sources, same sections are applicable. Section 5, Section 6, Section 7. No, Section 5 is not applicable. Section 6, Section 7 and Section 8 is applicable for that partnership. In addition to that, Section 10 to Section 19. All sections are applicable except Section 18. Section 18 is specifically applicable for companies. So it is not applicable for partnerships. So that means Section 19 also applicable. So Section 19 says about the deduction of losses. So when we are deducting losses, if a partnership incurred a loss, that loss can be deducted as same as we deducted losses from the profit when we are calculating individual taxation and company taxation. So this is also very similar. Then Section 55 says a partner's share of partnership income or loss. That means we have to calculate partner's share of partnership income or loss for the year of assessment must be included in or deducted from their income based on partner's year that ends within the partner's assessment year. That means partner's share of it can be either income or a loss. It should be included to the individual taxation. Either it can be a profit or loss. So in our individual income tax return, if you have already seen that return, I will show you later. In the return, it says how to include their business income, investment income and other income sources in the return. So it's specifically mentioned income from sole proprietorship, income from partnership and income from trust. That means when we are calculating individual's tax liability, if that individual has a sole proprietorship separately and partnerships from with other partners, all income should be considered as that individual's income. So all should be included in the individual's income tax return. It can be either profit or a loss. Gains from selling a partnership interest are treated as business income and taxed accordingly with adjustments under section 56. So section 56 provided the provision. So that means if we want to sell my partnership interest to others, it is part of my business income. So I have to consider it as a business income. Then the next provision is, all these provisions are in summary form as I explained earlier. Please read related section in the Act. It has in 3 languages. So any income or loss allocated to partners. So that means in the partnership, when we are calculating partnership liability, we can specifically identify partnerships business income and then partnerships investment income and partnerships other income. So when we are calculating individual's tax liability, that means partners' tax liabilities, it should keep its original type and source. That means if any income is categorized under partnership's business income, business source, in the hands of the partner, definitely it should be a business income of the partnership. That means the source means business income under partnership means in the hands of the partner, it is also business. In the hands of partnership, if it is a investment income, so in the hands of the partner, it is investment income. So we have to keep its original type and source. Is considered earned or incurred by the partner at the end of the partnership's assessment year. So we have to consider the same year of assessment. So if we calculated partnership's tax liability for the year of assessment 25-26, for the same year of assessment, we have to include under partner's tax liability. Same year of assessment. Must be allocated based on each partner's share. So this income and loss should be allocated based on the partner's share unless the Commissioner General decides otherwise in writing for valid reason. If Commissioner General has not decided the base, they have to allocate their income or loss based on their share. So taxes paid by the partnership, that means that partnership should pay taxes including foreign income tax. After paying taxes by the partnership, that should be allocated to partners based on their share in the partnership. So that means in the partnership, they have their specific ratio to share their profit. Sometimes partners can share their profit equally. If there are 3 partners, 1/3 of 1/3. 1:1:1. That is the profit allocation ratio. But without considering that part, if a partnership made a payment to the for the partnership tax liability, then that amount should be apportioned to the partners based on their share in the partnership. So now I think you can understand partnership, there is no double taxation. That means you may consider that a partnership paid income tax. Again, on the same income, partners also should be paid taxes. If we are doing that kind of thing, that means it is a double taxation, because partner pay the taxes on the partnership income. After that, partnership income should be allocated to the partners. Then partner again has to pay taxes based on that partnership income. That means double taxation. So we have not applied that kind of thing. Therefore, after making the tax payment by that partnership, that payment should be apportioned to the partners, allocate to the partners based on their share in the partnership. These taxes are considered paid by the partners themselves. So we consider, even though that tax is paid by the partnership, after allocating that to the partners can take it as a tax credit. It is like a withholding tax. So after making the payment by the partnership, that payment should be allocated to the partners based on their share in the partnership. After that, partner can deduct it as a tax credit. So sometimes there may be the credit may be excessive than the tax payable, but no right to a refund of any excess. That means sometimes, for an example, partnership paid 200,000 tax. So there are only two partners. So that 200,000 tax can be allocated to partners. For an example, 100,000 per each tax partner. But when we are calculating each partner's tax liability, suppose one partner's tax liability is higher than that 100,000, the other partner's tax liability is less than 100,000. That means if it is less than 100,000, the balance should be paid. But if it is higher than the 100,000, balance should be paid by that partner. But if it is higher, that credit is higher than the tax liability, that means it is a credit refund. But it will not be refunded, but can be carried forward as a tax credit in the following year. Not the following years, only to following year. If there is a refund, that refund can be carried forward only to following year. If there is a balance refund, it cannot be requested from the Inland Revenue Department. The allocation is made when the income is treated as derived by the partners and each partner's share is determined according to the partnership agreement. So this is how we have to allocate that credit. In the partnerships, there are some issues. What are the issues? Since partnership is not a legal body, not a legal entity, sometimes husband, wife, children are the partners of a partnership. It is obvious, because a husband can start a partnership with his wife. So, but we consider it as an arrangement to reduce their tax liability, because if a husband has a partnership with the wife, then they can make several arrangements. husband can pay a lot of salaries to his wife, then he can think that it can be deducted from the tax liability like that. So we call it income splitting. Income splitting means to avoid making taxes, to preventing paying taxes, they can apply several arrangements. So we consider it is also as an arrangement. Therefore, specific section is provided in that. We call it section 34. It says income splitting. So income splitting is not permitted by that, because they can split their income to reduce the tax liability. Where a spouse receives income for services rendered in any business carried on or exercised by the other spouse, that means other spouse is starting some businesses, so if he pay salaries to his wife, or sometimes a wife has a partnership, she can pay salaries to her husband. So we call it income splitting, so it is not permitted. So therefore, if there is a partnership and the partner is a husband, even though wife serves to the partnership, the partner can pay salaries to his wife, but that salary should be considered as an income of the partnership of this husband. So therefore, we do not allow that kind of things. So that means in the practical world, salaries can be paid, but for tax purposes, we consider it as an income of the husband, not the wife. Then we have one important person in the partnership. We call him a precedent partner. We have a specific definition. So precedent partners are in the partnerships. So precedent partner means the partner who of the active partners resident in Sri Lanka. So we call him as precedent partner because some responsibilities are there to precedent partner. That is why we have a specific definition. In that it says it is responsible for the precedent partner. Is first named in the agreement of partnership. That means first named in the agreement of the partnership. If there is no such agreement, is specified by name or initials singly or with precedence with the other partners in the usual name of the partnership, or is the first name in the statement made under section 4 of the Business Names Act. So this kind of partner will be considered as a precedent partner. So it is very important. That is why we have separately mentioned about that partner. Then what are the applicable tax rates for the partnership? Normal tax rate is for the first 1 million. This is taxable income. That means after the calculation of the assessable income, we can deduct only qualifying payments. After that, we are arriving at the taxable income. So from that taxable income, first 1 million, applicable tax rate is 0. So it is remain unchanged from the previous periods because we had several changes from 2025 year of assessment, but for the partnerships it is same. And for the capital gain, it is 10%. Actually, I have made an error in the previous presentation slides. That means in the taxable income part, I have mentioned capital gain tax for 25-26 as 15%. Actually, it is effective from the date of the certified of the amendment act. So it happens in June 2026. So from 26-27 year of assessment, applicable capital gain tax rate is 15, not for 25-26. I will make the change later. Okay, so this is the calculation. These are the provisions of the partnership tax computation, calculation. So let's do one example for the partnership taxation. So if you have any question regarding the partnership taxation, you can ask. Okay. Yes, correct. Repeat the correction. Actually, for the capital gain taxes, we amend the tax applicable tax rate for individuals. For companies, it is 30% from the beginning, but for the individuals, applicable tax rate for capital gain tax was 10% earlier. So from the budget 2025, it wanted to increase up to 15%. So the act was effective from 2026 June. So that change was made from the date. You can see the amendment in the amendment of number 11 of section number 11 of 2026 Inland Revenue Amendment. So under section in section 1 of that amendment, you can see the effective dates of the provisions available in that act. So you have given a specific table. In the table, it has mentioned specific dates to be applied that provisions, but this provision is not available in the act. Therefore, we can consider that amendment is applicable from the date specified by the speaker. So the date specified by the speaker is 3rd of June 2026. Therefore, applicable tax rate for capital gain is 15%, but it is effective not from 2025-26 year of assessment, but from the 3rd of June 2026. So that is what I wanted to change. Is it okay? Understood? පැහැදිලි වුණාද? If you can read the amendment, yes, okay. If you can read the amendment, Act number 11 of 2026 under section 36. It has mentioned 15% with effective from the date on which the provisions referred to in subsection 2 of section 1 come into operation. So it comes into operation from the date of certified by the speaker. Okay. This is the taxation of partnership. So I have given very small partnership transactions. Very few details are there. Please read it carefully. Mr. A, B and C. That means there are three members, three partners are in this partnership. A, B, C partnership. So they are engaging in manufacturing cosmetics. For the year ended 31st March 2026, net accounting profit was 12 million. Yes, you are requested a summary, so I think that is regarding the amendment or what? Or partnership taxation. Regarding what? Partnership taxation. Partnership taxation එක ගැන සමරියක් කියන්න. Partnership tax එක individual අයගේ වගේ company වගේ partnership එකත් එක්තරා ජාතික entity එකක්. මේ entity එකේ දෙන්නෙකුට වඩා partnersලා අනිවාර්යෙන් ඉන්න ඕනේ. ඒතර partnership taxation එකේදීත් අර වගේම අර business income එක ගණනය කරනකොට අර apply කරන්න තිබිච්ච rates වල කිසි වෙනසක් ඒ provisions වල කිසි වෙනසක් නැහැ. අපි individual වලට apply කරේ නැහැ section 18. ඒ වගේම partnership එකටත් section 18 apply වෙන්නේ නැහැ. හැබැයි අනිකුත් සියලුම provisions සමානයි. එතකොට partnership එකේ employment income එකක් නැහැ. මොකද partnership එක මිනිස්සෙක් නෙවෙයිනේ. මිනිස්සෙකුට විතරනේ employment එකක් තියෙන්න පුළුවන්. එයා මිනිස්සෙක් නෙවෙයි. ඒ නිසා එයාට employment income එකක් නැහැ. එයාට තියෙනවා business income එකක් සහ investment එකක් තිබුණොත් other income source එකක්. ඒතර මේ sources තුන තියෙනවා. මේ sources තුන identify කරගන්නේ අපි කලින් කතා කරපු විදිහටමයි. deduction rules ඒ විදිහමයි 18 section 18 විතරක් apply වෙන්නේ නැහැ. අනිත් හැම provision එකක්ම සාමාන්‍ය විදිහටම apply වෙනවා. ඊට පස්සේ relief apply වෙන්නේ නැහැ partnership එකකට. මොකද ඒක ආයතනයක්. සමාගමකටත් relief අයිති වෙන්නේ නැහැ. deduct කරන්න බෑ. මම එදා කිව්වා වගේ relief අඩු කරන්න පුළුවන්කම තියෙන්නේ තනි පුද්ගලයින්ට විතරයි. ඊට පස්සේ qualifying payment අඩු කරනවා. මොකද අපි කතා කරනවා source ටික identify කරනවා. ඒක සමානයි. accessible income from investment business or other sources ඒක හරි ඒ විදියමයි. ඊට පස්සේ අපිට තියෙන්නේ relief හරි qualifying payment හරි අඩු කරන්න. හැබැයි partnership එකට relief හිමි නෑ. ඒ නිසා relief අඩු කරන්න බෑ. ඊට පස්සේ අපිට අඩු කරන්න පුළුවන් qualifying payment. qualifying payment අඩු කරනකොට මම එදා කිව්වා individual අයට අදාළ qualifying payment මේ විදියයි. සමාගමකට අදාළ qualifying payment මේ විදියයි. ඒතර සමාගමක් හා සමානව තමයි partnership එකට අදාළ වෙන්නේ. ඒකට හේතුව අපි person කියන එකනා ගත්තොත් person includes individuals and entities. ඒතර entity කියන එක ඇතුලේ හිටිය සමාගමයි partnership එකයි. ඒතර මේ qualifying payment බෙදලා දීලා තියෙන්නේ individual අයටයි entity වලටයි. ඒ නිසා සමාගම හා සමාන තිබිච්ච provisions වලින් විදියට qualifying payment උත් අඩු කරන්න පුළුවන්. ඒ කිව්වේ qualifying payment අඩු කරනකොට approved charity එකකට නම් අර මම කියපු කරුණු තියෙන්න ඕන. මුදලින් පරිත්‍යාග කරලා තියෙන්න ඕනේ. අර humanitarian අර මම කිව්වේ මොනවාද? අවශ්‍යතා ඇති අය වෙනුවෙන් ආයතනික පහසුකම් සපයන ආයතනයකට මේක කරලා තියෙන්න ඕනේ. ඒ ආයතනය මුදල් ඇමතිවරයා විසින් අනුමත කරලා තියෙන්න ඕන. අන්න ඒ වගේ එකකට දෙනවා නම් තමයි මේක වෙන්නේ charitable institution එකක්. ඒතර මෙන්න මේ වගේ අයට කරනවා නම් මේ පරිත්‍යාගය මුදලින් කරලා තියෙනවා නම් විතරයි donation එක approve කරන්නේ qualifying payment එකකට. ඊට පස්සේ ඒක සීමා කරනවා මෙයාගේ taxable income එකෙන් 3/1කට. එහෙම නැත්නම් මෙයා කරපු donation එකට හෝ 75000 යන එකේ අඩු එකට. ඒ individual අයට. entity එකේදී මේ ගාන වෙන්නේ අර provisions එහෙමමයි limitation එක විතරයි වෙනස්. limitation එකේදී කියනවා taxable income එකෙන් 3/1ක් හෝ ලක්ෂ 5ක් හෝ කරපු donation එක තියෙන 3න් අඩු වගේ තමයි මේගොල්ලන්ට ඉඩ දෙන්නේ කියලා. එතකොට අපිට මේක බෙදන්න තියෙන්නේ qualifying payment එක අර වගේම entity එකට relevant විදිහට. එතකොට මෙතනින් මේක බෙදලා අරගන්නවා. ඒ ගත්තට පස්සේ taxable income එක එනවා. මේ taxable income එකෙන් පළවෙනි taxable income එකේ පළවෙනි 1 million වලට tax එකක් නැහැ. rate එක 0. ඉතුරු ටිකට ඉතුරු මුළු සියලුම ප්‍රමාණයට හිටියන් මිලියන 2ක් කියලා පළවෙනි මිලියනේ 0. දෙවෙනි මිලියනයට 106 ගානේ tax කරනවා. මේක tax කරාට පස්සේ අපි මේ tax කරපු එක credit එකක් විදිහට දෙනවා partnersලට. එතකොට partnership එකේ assessable income එක taxable income එක නෙවෙයි partnership එකේ assessable income එක දක්වා හදපු කොටස අරගෙන ඒක business income එකෙන් වෙන්න පුළුවන් investment income එකෙන් වෙන්න පුළුවන් other income එකෙන් වෙන්න පුළුවන් මේ කරුණු තුනට අදාළව total එක බෙදනවා partnersලට separately partnersලගේ ලාභ බෙදා ගන්න අනුපාතයට profit allocation ratio එකට ඒක verbally තියෙන්නත් පුළුවන් නැති වෙන්නත් පුළුවන් නැත්නම් සමානව බෙදනවා තියෙනවා නම් තියෙන අනුපාතයට බෙදනවා එතකොට මේක බෙදනකොට partnership income එකේ business income වුණා නම් partnerගේ අතේදීත් ඒක business income එකක්මයි partnership එක අතේදී මේක investment income එකක් වුණා නම් interest එකෙන් නම් හම්බුනේ partnership එකේදීත් partner අතේදීත් මේක investment income එකක් interestමයි ඒතර partnership එකේදී මේක rent income එකක් වුණා නම් partnership එකට partnerගේ අතට යනකොටත් මේක rent income එකක්මයි. අන්න ඒ වගේ partnership එකේ තොරතුරු ඒ විදිහටම partner අතට යනවා. ඒතර partnerගේ income එකක් තියෙන්න පුළුවන්. partner තනියම business එකක් කරලා ලැබෙන income එකක් තියෙන්න පුළුවන්. partner කොහේ හරි තැනක employee කෙනෙක් වෙලා ඉඳලා employment income එකක් තියෙන්නත් පුළුවන්. අපි එතකොට partner විදිහට සලකලා partnerගේ පැත්තෙන් ගණනය කිරීම වෙනම යනවා. ඒතර partnerගේ පැත්තෙන් partnerගේ employment income එක partnerගේ තනි පුද්ගල income එක sole proprietorship එකක් තිබ්බොත් ඒක partnerට partnership එකෙන් ආපු income එක මේ ඔක්කොම එකතු කරනවා partnerගේ අතේදී මම ඒක return එක කියන පෙන්නනකොට පැහැදිලි කරන්න මේ ටික ඔක්කොම එකතු කරලා තමයි partnership එකේ partnerගේ income එක හදාන්නේ එතකොට partnerගේ income එක මේක හැදුවාට පස්සේ partnerගේ income එක සාමාන්‍යයෙන් අපි මෙතෙක් හදපු තනි පුද්ගලයාගේ ආදායම් බදු විදිහට ගණනය කරගෙන යනවා. කරගෙන ගිහිල්ලා අන්තිමටම partnerගේ tax liability හදනවා. හදලා partnerගේ tax liability එකට අර partnership එක දුන්න tax credit එක අඩු කරගන්න පුළුවන්. අපි අපිට අඩු කරා වගේ අපි AIT අඩු කරනවා වගේ partnership එකට ගෙවපු tax එකෙන් partnerට හිමි කොටස credit එකක් විදිහට අඩු කරන්න පුළුවන්. තවදුරටත් ගෙවන්න තියෙනවා නම් ගෙවෙනවා. ඒතර අපි partnership tax ගණනය කරනකොට partnership එකේ tax එක වෙනම ගණනය කරන්න ඕනේ. partnersලගේ අතට යන tax එක වෙනම ගණනය කරන්න ඕන. අපි දැන් මේක තමයි මේ ගානෙන් කරන්නේ. So we can start the question. So it says Mr. A, I think it is clear. If it is not clear, you can ask, but I don't like to give this time again. මොකද මේ මම ආයෙ මේක සිංහලෙන් කියන්න ගත්තොත් අපේ tamil language එක විතරක් දන්න අයට පාඩු වෙන්න පුළුවන් කාලය. ඒක නිසා ඔයගොල්ලන්ට ප්‍රශ්නයක් ආවොත් ඕන්න මේකෙන් පස්සේ ඉඳලා මගෙන් ආයෙ අහන්න. මම පොඩි වෙලාවක් දෙන්නම් සිංහල language එකෙන් වැඩිදුර පැහැදිලි කිරීම අවශ්‍ය අය හිටියොත් මට ඒක කියන්න. හරි ක්ලියර් නැති කෙනෙක් ඉන්නව නම් අහන්න මම ලෙසන් එක ඉවරනාට පස්සේ කියන්නම් කැමති විදියට කතා කරන්න කියලා. මම ඒ වෙලාවට ඉඩ දෙන්නම්. හරි. Okay. Now we can start the question. Mr. A, B and C are partners of a partnership business so they are manufacturing cosmetics. So you have given its net accounting profit. It is 12 million. So this 12 million is arrived after deducting some expenditure. So you have given those expenses. Salaries paid to A and B 2 million and 1.6 million. Mr. C has given a loan to the partnership of rupees 5 million at the interest rate of 5%. Also, a loan taken from Mr. A's wife was 2 million at the interest rate of 6%. Mr. B's wife is working as a finance manager and the salary paid for the year was 2 million. Profit distributed equally among the partners. So, we have a separate partnership agreement. There may be partnership agreement or not. There can be a written agreement or not. But they have a specific profit distribution ratio, that is equally. There was interest income of 300,000 and dividend income of 200,000 received as other income of the partnership. Donation made to the cancer hospital by the partnership, that is 50,000. So now you have to calculate the tax liability of this partnership and partners share for the year of assessment. Then after that we can calculate partners tax liability as well. So this is how we are giving some questions for you to do the calculations. So salaries paid to A and B and loans given by the partner. So these are the main particulars given in this question. So now you can remember some important thing I have already mentioned. What are those? What are those? In the example, in the presentation slides, I included some important thing. If a partnership paid salaries to partners, did we allow it? Do we allow it or not as a deduction? Salaries paid to partners, interest paid to partners. Can we allow it? No. Yes, very good. It is not allowed because it has specifically mentioned in that any service fees paid to partners are not allowed. Then what is the next thing? Interest paid to partners are not allowed. That means we have to add them back. Salaries paid to spouse are allowed to be deducted, but it is a part of the partner's income. So we can allow it as a deduction, but when we are considering that person's tax liability, we have to include it under partner's income. Okay, now we can move to the computation. So I will share this question in the chat box. Okay, so I have shared the question. Now you can see the calculation. So I have given you the net profit, that is 12 million. That is 12 million. is 12 million. Then it includes dividends and interest. We have to remove it because we are calculating business assessable income from business. Therefore, dividends and interest are not a part of the business income. That is why we remove it. After that, we have income profit from business. After removing these two, it is income from business. Then that net profit is arrived after deducting partners' salaries. That means 2 million and 1.6 million. So that is partners' salary. So in the provision it says we are not allowed to deduct salaries paid to partners, service fees paid to partners, interest paid to partners. So that is why, since those are not allowable to be deducted, since it has already been deducted, we have to add it back. So I have shared the question. Yes, I will share the question, but I have included it in the chat box. I will share it. Okay, it is partner salary A and B. And in addition to that, loan interest of Mr. C, that is, he has given 5 million at the rate of 5%. I have to calculate the loan amount, interest amount, that is 250. So I should add it back. It has another payments. It has another payment, that is, Mr. B's wife is working as a finance. Next one. Also a loan taken from Mr. A's wife was 2 million at the rate of 6%. So it is allowable as a deduction. Why? In the act it does not say to add back. That is why we can allow it. So Mr. A's wife has given a loan, but we can allow that interest. So that is why I have not added it back. And B's wife also working in the institute, but it is also allowable as a deduction because it is a salary paid to B's wife. So in the hands of the partnership income, when we are calculating partnership income, we can allow to be deducted partner's wife's salary at the point of calculating assessable income from business. That expenditure is deductible. So after calculating, after adding these things, the business income from assessable income from business is 15,350,000. Then we have given investment income, that is interest. Dividend income is not a part of the investment income. I think you can remember. That is a final withholding payment. Therefore, dividend should not be included in the assessable income. That is why I have not included it here. So only interest part should be added to the income. So that is 300,000. Then total assessable income is 15,650,000. Then we can deduct qualifying payment. We have to consider whether it is a qualifying payment or not. It says donation made to the cancer hospital by the partnership, it is 50,000. So what are the main criteria to be considered it as a qualifying payment? Either it can be a donation to an approved charity or to the government. Government means government institutions. So this is not to the approved charity but to the cancer hospital. So cancer hospital is a government hospital. So government hospital, government school, we can donate, so it can be considered as a qualifying payment. Here it is to the cancer hospital, therefore we can consider it as a qualifying payment. So for the donations made to government, the total amount can be deducted as a qualifying payment. Limitation is not there. So for the government donations, the limitations are not mentioned. So no limitations. Total amount donated can be deducted as a qualifying payment. But up to which level? Up to the assessable income. 15,650ක් තියෙන නිසා මිලියන ලක්ෂ 50ක් පුළුවන්. මේක 16 million donation is not allowed because it should be limited to the assessable income, because taxable income should not be a minus amount. So I have mentioned it, I have explained it earlier also. So taxable income should not be a minus part. So after that we can apply. We have already calculated taxable income. To that taxable income we can apply tax rates. So for the first 1 million, applicable tax rate is 0. Applicable tax rate is 0. Okay. For first 1 million, applicable tax rate is 0. For the balance part, applicable tax rate is 6%. 6%. Applicable tax rate is 6%. So that is 876. So payable tax is 876. So it is already paid. It is already paid. So 876 was paid. So I have mentioned it is paid. If it is not paid, it cannot be given as a credit to the partnership. So here I assume that it has already been paid. It is not mentioned in the question. It is 6%. So I assume that this tax is paid by the partnership. Now I have calculated tax liability of the partnership. Then we have to prepare a specific table. So we call it share of profit, calculation of share of profit. So we cannot stop the calculation from this part, but this specific table also should be calculated if we are calculating partnership tax liability, because this includes the share of profit of the partners, not the partnership. So now we are going to do that calculation. We call it calculation of share of profit of the partner. How do we do it? This is a format for that one. Total column should be there. It can be from the first column or the last column. It can be a first column or the last column. But all partners should be included in the table. And the description column also should be there. Then we can include all the important details here. Here, මේක චුට්ටක් වෙනස් විදිහක් ඒක නිසා හොඳට හිතට ගන්න. So when we are preparing this table, first of all, we have to include all the items we are already know. What are those? We have to write share of profit line. It can be either in the first line or the last line. Last line means it is like here. So if we are including it as a first line, write it here like share of profit. Then keep these lines blank. First line blank. Then we can move to the question. It says salaries and other payments made to the partnership, which we have already added back. Here we included salaries and the interest on loans to the calculation. Here you can see partner salaries and loan interest we have added back. We disallowed that one. That part should be written here. Salary to A 2 million, for B 1.6 million, for C no salary. Then interest on loan 250, that is the total amount. It paid to Mr. C. It should be in the C's column. Then as a total line, we have to mention the business income. We have to mention the business income because this is the total business income of the partnership. Total business income of the partnership. We should include it here under total column as a total line. This is the total line. 15,350,000. So then we can calculate share of profit. How? By deducting 3.6 and 250, because 15,350,000 was calculated by adding these three lines. That is why we deduct that part to be calculated share of profit. So මේක පහළ ඉඳලා ඉහළට යන කන්මුදෙනවා. එතකොට මෙතන අපි ඉස්සෙල්ලාම කිසි දෙයක් පෙන්නන්නේ නැහැ. It should be a blank one. The first cage should be a blank one. Then we have to include all these things should be blank when we are preparing this table. First line, if the first line is share of profit, keep all these cages blank. Start from the next one, salary and the interest, because these two are the added back disallowed one. Include that disallowed one first. Salary paid to Mr. A 2 million and B 1.6 million, total is 3.6. Interest on loans paid to Mr. C 250, that should become to the total income. Now we know two lines, then we know the total line also. Total cage figure also we know, because it is the business accessible income from business, this part. So accessible income from business is this one, so we have to include it here. After including this one, we can fill the first line. We can fill the first line of total column, that is 11,000,005. Then we have to allocate this business profit into partners. How? In the question it says profit attributable equally among partners. So profit attributable equally among partners. Therefore, this share of profit should be allocated to partners equally. That is why 3.8, 3.8, 3.8. පැහැදිලිද? after including that figures in the first line cages, we can aggregate, we can fill the total line. It is equal to 15.35. එතකොට මේ 15 මිලියන 15 ඉඳලා තමයි මිලියන 11 ගණනය කරගන්නේ. මිලියන 11 ගණනය කරාම ඒක මේ පැත්තට ගණනය කරනවා. මෙහෙට යනවා. එතකොට මෙන්න මේ විදිහට තමයි මේක කරන්නේ. පැහැදිලිද? මිලියන 15න් 11 ගණනය කරනවා. 11න් තමයි මෙහෙට යන්නේ. අපිට මේක ඕන මේ පැත්තට දාන්න පුළුවන්. So I think now you can understand. මෙන්න මේ විදිහට තමයි මේ chart table එක හදන්නේ. Then after that we can apportion other income as well, because this is a partnership. They have an agreement to allocate their profit and loss equally. Therefore, if they have an investment income, that is interest, it is also should be allocated equally. So they have received 300,000 interest income, it should be allocated equally. If they are having qualifying payment, it should be allocated equally. So after that, the partnership has paid 876,000 as a tax. That should be allocated not equally, but based on these values, based on these values, not the equally, but based on the share, based on the share of the partnership share. හරිද පැහැදිලිද? එතකොට මේවා equally බෙදුවා, මේවා equally බෙදුවා. මොකද equally බෙදන්න කියලා තියෙනවා. Therefore I aggregated equally, but after that we have to allocate based on the share of profit. Then we can move to the calculation of each partner's tax liability. How do we do it? We know partnership business income, we know partnership investment income, then we can calculate total assessable income. From that total assessable income, we can deduct personal relief, then qualifying payments. Then we will have taxable income. So to that taxable income, we can apply individual income tax rates 6%, 18, 24, 30, 36. After applying those tax rates, as I have already explained, when we are calculating individual tax liability, we can calculate total tax payable. So to that total tax payable, we can give a tax credit which has already been paid by the partnership. So that amount can be given as a tax credit. This is a tax credit. Then we will have balance tax payable. එතකොට මෙන්න මේ ටේබල් එක හදා ගැනීමේදී ඔයගලන්ට පුංචි ගැටලු වෙන්න පුළුවන්. After that it is very easy because it is very similar to individual income tax calculation. So if partner A has an assessable income from employment, so we have to include it here. If suppose Mr. A is working in another organization as an employee, then we have to include assessable income from employment. Assessable income from employment should be included if it is available. If this person or partners have sole proprietorship tax liability, we can include here. If there is a sole proprietorship for a partner, it can be included here. If that partner has a charity, what is that? No, not charity, not the charity, but trust, it should be included here. But it is not mentioned in this question. Therefore, no employment income, no business income from sole proprietorship, only partnership income is there. Therefore, we can calculate it from here. Then තේරුණාද? මේ අය මේව තියෙනවා නම් මේවත් include කරන්න ඕනේ. Yes, qualifying payment among partners also should be calculated based on their share of profit. මේ ඒකට නේද මාර්ක් දාලා තියෙන බලන්න. මොකක්ද එතන? There is an issue. Thank you very much for reminding me. No, it's so. It is also should be allocated equally. මේකයි මේ වෙලා තියෙන්නේ. මෙයා මේක වැරදියට ගන්න. Same. it's okay. Thank you for the correction. So it is also should be allocated equally. Only the tax credit should be allocated based on the share of profit. Share of profit means the total amount of the total allocated amount, based on the total allocated amount, but equally uh, since this partnership's profit should be allocated equally, it has mentioned in the agreement, or if it is not mentioned in the agreement, we have to apply equal allocation. Okay. හරිද එහෙනම් අපි ඊළඟ ගානට යමුද? This is also a calculation of a partnership tax liability. Rasika and Tilaka are partners in a partnership where profits and losses are shared 65% and 35%. That means in the first example, they allocated equally. Here, their profit and loss are allocated 65% and 35%. The partnership carries on the business of manufacturing garments for the domestic market since 2019. Mr. Nadira, husband of Rasika, is working as a factory manager and receives salary of 150,000 and vehicle allowance 70,000 manually. I wanted to show you one more important thing in the previous example. Please excuse me, I want to go to the previous one. This note: interest on loan given to Mr. A's wife is deductible subject to the provisions of section 33. It is deductible. Mr. B's wife's salary is deductible but treated as income of Mr. B. So this 2 million. This 2 million is this 2 million is deducted when they are calculating their book profit, and we did not add it back because it is allowable in the hands of the partnership. But in the hands of the partner, we should be considered this 2 million as a part of the income of Mr. B, because it is a splitting of income. Since he is the partner, he paid salary to his wife, so we have to add it into the B's income tax liability. So that is what I wanted to tell you. Then we can move to Miss Rasika and Tilaka. Rasika and Tilaka. Where is it? So he has received Mr. Nadira, husband of Rasika, is working as the factory manager and receives salary of 150,000 and vehicle allowance 70,000 monthly. The net profit of the partnership for the year of assessment is 9.6 million after deducting all expenses including the following. Salaries to partners, Rasika has given vehicle allowance monthly. Interest paid to Tilaka on loan was 380. So you have given these details, that means to be calculated capital allowances. So you know how to calculate capital allowances. It is not necessary to explain it again. Then the book depreciation charged to the income statement is 6.9 million. The new machine was purchased on this date after disposal of old machine. So you know how to do this calculation. Then business promotion expenditure. Donations during the year represent 200,000 value. Kids wear to approved charitable institution providing institutionalized care for sick and needy children. So you have to consider whether it is a qualifying payment or not. Okay, tell me, is this a qualifying payment or not?
No.
One says no, one says yes. Why not?
Cash amount.
Okay. Then Pumi, why you said it is yes? Kids wear. ළමයින්ගේ ඇඳුම්. Donation was made 200 million worth of value kids wear to approved charities. Yes, it is to the approved charity, but not in cash. So to be qualified it as a qualifying payment, a donation made to a approved charitable institution should be in cash. සල්ලි වලින් දුන්නා නම් විතරයි approved charity එකකට දුන්න එකක් donation එකක් qualifying payment එකක් වෙන්නේ. මෙතන දීලා තියෙන්නේ ඇඳුම් බඩු දීලා තියෙන්නේ. ඒ නිසා it is not a qualifying payment. The legal cost incurred is connected to the private property of Miss Rasika. So several details are given. So legal cost incurred is connected to the private property of Miss Rasika. That is, it is 170,000. So it is a payment made to a property of Miss Rasika. It is a private property. So it should be added back. It is not allowable. Bad debt written off is 142,000 and it is released to a loan given to material suppliers who bring materials from China by hand luggage. So we have to consider whether it is allowable or not. All other expenses are allowable for the purpose of taxation. Partnership does not have other sources of income. The partnership is not entitled to claim any tax exemption provided in the Inland Revenue Act. So you have given these particulars, so you have to calculate the tax liability of this partnership. Okay, let's try to do it. I will share this with this in the chat box. දැන් මම කියලා දුන්න දේවලුත් එක්ක try කරන්න මේක හදන්න පුළුවන්ද කියලා බලන්න. උත්සාහ කරන්න නැතු වුණොත් අමාරුයිනේ. ඒ නිසා try කරන්න මේක හදන්න පුළුවන්ද කියලා බලන්න. I will give you 15 minutes. Try to do the calculation. At least some part of the calculation. You know what are the allowable, what are the figures not allowable, how to apply capital allowances, how to do that calculation, how to deduct qualifying payments. You know everything. So only thing is you should memorize previous calculations. Okay, try to do the calculation. Okay, we can start the computation. You can the answer. Yes, it is here. I think you can see the answer. You can see the answer. We can start it from the beginning. That means as you know how to do these calculations, we can start it from here. You have given net profit, that is 9.6 million. Rasika and Shilaka you have given net profit, that is 9.6 million. Then salaries are already deducted. Salary paid to Rasika and Tilaka, it is already deducted. It is already deducted, therefore we added it back, 3.2 million. Vehicle allowance to Rasika, that is also a type of the salary, therefore it is also not allowable. So 50,000 is per month. We have multiplied it by 12 to calculate annual allowance. 6 million already added. Interest paid to Miss Tilaka on loan granted. So partners' salaries and partners' interest are not allowed as a deduction. So it is also added. Then husband's salary and vehicle allowance, it is allowed because it is paid to her husband's as a salary and vehicle allowance. It is allowed, but we have to consider it as an income of that partner. It is income of the partners. Then book depreciation should be added back. Then land, you have given land. So since we added back that book depreciation, we have to calculate depreciation, that means capital allowance for the assets given in this question. So land, it is no capital allowance are deductible. Then building, you have given building details. Building 8 million by divided by 20, 400,000 can be allowed as a depreciation. Then machine disposal, so you have given details of the machine, cost is there, accumulated depreciation also given, then the amount transferred to the P&L also given. So you can calculate the cash value, that means sale proceed of the disposed machine. So we can calculate the gain on that disposal, so multiply it by deducting written down value of that machine. So it is 2,160,000. So the gain on that disposal is 1.6 million. Then that means for the machine disposal profit is already included, so we have to remove it and we have to calculate disposal gain based on the tax provision. So it is 1.6 million. Then new machines can be considered capital allowance for new machine by dividing 5 years, that is 1.04. Then motor lorry, 5 years depreciation can be granted. Delivery van leased, 5 years can be granted. Furniture, 5 years. Computer hardware, computer software, 5 years depreciation can be granted. Business promotion expenses, it is allowable because we have not given much details. Therefore, we can assume that all are entitled for the deduction as Marcom expenditure. Then donations, it is not allowable because donations are not allowable under assessable income calculation. Then legal cost, it is a personal use, therefore it is not allowable. Bad debts written off, it is allowable. So then we can calculate partner share of profit. Now we can deduct. So we call it partner share of profit means assessable income. So from that assessable income, we can deduct qualifying payments. So when we are considering the details given for qualifying payments, we can determine it is not a qualifying payment, because even though that donation is made to the approved charity, it is not in cash, it is in kind, therefore it is not allowable as a qualifying payment. Then we have a taxable income from the partnership. So to that taxable income, we have to apply tax rates. For first 1 million, 0%. For the balance taxable income, it is 6%. So total tax payable is 965,000. So we can imagine that this amount has already been paid. If it is considered as a payment made, then we can grant tax credit for Rasika and Tilaka when we are calculating their personal tax liability. If it is not, we cannot grant a credit, because credit can be granted only to the paid amounts. So here I have not mentioned whether that tax is paid or not. So you can make assumption. If you assume that it is paid, credit can be given to Rasika and Tilaka. If you assume that it is not paid, credits cannot be given to Rasika and Tilaka. It can be decided based on your assumption. So now we are moving to the most important part, that is profit allocation to partners. So we have 2 partners. Now we can allocate income to partners. So as I have already explained, we need 4 columns table, 2 columns for partners, 1 column for the total value, it is very important, and the description part. So first line, share of profit, we have to keep blank until we enter the other figures. Then salary, that is the disallowed amount. Then vehicle allowance. Then interest on loan. After that, we can include share of profit allocated to partners. It is here 17,094,000. This one. Yes. 17,094,000. So after that, using these 4 figures, we can calculate share of profit. Then we have it 12,914,000. Then that amount can be allocated to partners based on their profit allocation ratio, that is 65% and 35%. After that, we can total Rasika's and Tilaka's share of profit allocated to partners. The balance value can be calculated. Then we have not given investment income, therefore nothing to mention. So then husband's salary, that is 2.6 million. It is a part of Miss Rasika's income tax. Part of the income. So we have to separately identify it when we are calculating Rasika's tax liability. So I have calculated it up to here. So like I have already calculated it for ABC company, you should calculate tax liabilities of Miss Rasika and Miss Tilaka. So I will share these examples with you. Then you can do that calculation in accordance with the first example. In addition to that, I have included one more important table for your reference. So this is qualifying payment part. As I have explained, we have to consider some donations based on the specifications given under Schedule 5. So donation to approved charity providing institutional care for sick or needs. So we can merge it. Yes. But we cannot merge it. I don't know why. Yes. This is donation to approved charity providing institutional care for sick or needy. So it should be in cash to be considered it as a qualifying payment. If it is a qualifying payment, these are the limitations. These are the limitations. If it is an individual, 1/3 of the taxable income, 75,000 amount donated, whichever lower. If it is a partnership or a company, same limitation is applicable because it is an entity. So donations to government or any other specified institutions in the act, then cash or goods all can be considered, no restriction. Without any restriction, total amount can be considered. Okay, I will share this document with you, then you can refer it when you are doing your examples and all these things. So yes, if you have questions you can ask. හරි, partnership income tax ගැන මොන හරි ප්‍රශ්නයක් තියෙනවා නම් අහන්න. Okay. Okay, last day's answer sheets and these answer sheets. Some past papers. So I think past papers can be obtained from LMS. So last week I did, actually that was a past paper. Last day we calculated individuals and companies tax liability. That is from a past paper. You can request it from Ms. Kalhari. So she will share the past papers. Answer sheets I can share. Okay, if you don't have questions regarding the individual taxation, company taxation and partnership taxation, we can move to the administration provisions. So this is relevant to income tax. So for income tax, value added tax and each tax type, we have a separate administration provision. So this is relevant for income tax act. So what are the administration provisions? Administration provisions means up to today we did calculation. Those are not the administration but the operational provisions. But now I am starting administration provisions. So these are the sections specifically IRD officers are using. So section 97, so administration provisions are starting from here. Then officers, so section 97 says who are the officers. They are tax administrator, Commissioner General of Inland Revenue. Section 97 says who are the officers who should do these activities. Mainly Income Tax Act administrator is Commissioner General of Inland Revenue. So she or he can delegate powers under section 98 to all IRD officers. So Inland Revenue Department, we have several officers from several services. That means IRD officers are from IRD service. So we are IRD service officers. We are not transfer. We don't have transfers. We cannot transfer from IRD to another government organizations because IRD is a closed department. So we have a specific service. It says Inland Revenue Service. So in the department we have accountancy service officers, administration service officers, combined service officers, then yes, engineering service officers. So those are officers from other than Inland Revenue Service officers. So power can be delegated by the Commissioner General to the services to Inland Revenue Service officers because they are entitled to conduct all tax type activities, administration activities on behalf of the Commissioner General. Then section 100, it is a confidentiality section. So it says the confidentiality should be considered by the officials in the department. Confidentiality is very important because we have very sensitive data of all taxpayers. Therefore, we have to keep confidentiality with regard to those details. So in the organization, within the organization, officers can share those information. Other than that, under section 100, it says with whom we can share the documents. So it is a huge list. So you can refer that list mainly to the Bribery Commission, to the Fiscal Policy Division, like that there are several divisions. So we can share details with them. So with the persons who has not mentioned in that document cannot be shared the information available in the IRD. So section 101 says informants. That means informants can give information to IRD to be collected taxes from other parties because they are doing very important role. Sometimes it is like a petition. හරියට මේ අරයාගේ මෙයාගේ බොරු කේලම් කියනවා වගේම දෙයක් තමයි. අර එහා ගෙදර එක්කෙනාගේ මෙහෙම තියෙනවා, මේ ගෙදර එක්කෙනාගේ මෙහෙම තියෙනවා, ඒ වගේ කියලා information දෙන අය. So those with regard to the informants, we have section 101. So if there are some informants, we can grant them a මොනවද ඒකට කියන්නේ? ඒගොල්ලන්ට අපිට දෙන්න පුළුවන් මොනවද? tag rewards can be given to informants according to section 101 if it is a worth one. Then section 102 is for registration. It says every person liable to furnish a return of the income tax department should register within the department. So now it has been increased to register within the department if you have already completed 18 years of age. So that is registration, TIN registration. In addition to that, tax type registration should be obtained if you have a tax liability. So in addition to that, every company after incorporation with the Sri Lankan company registrar, with the Sri Lankan company registration department, within 30 days of that registration, they should obtain a TIN registration from the department. So it is a must. So it is a responsibility of that organization, mainly companies. Then taxpayer identification number, it is a TIN number. TIN number should be obtained by all taxpayers who has already completed 18 years of age. As I have already explained, we will issue a TIN certificate to them. In addition to that, for these purposes, they should obtain a TIN. Without TIN, these things cannot be done. To open any account at any financial institution, if you want to open a bank account in any financial institution, you should obtain a TIN and you should provide that TIN to the manager of the financial institution. To obtain approval for a building plan, if you are going to construct a building, to obtain approval, you should obtain a TIN. You should provide your TIN number to obtain that approval. If you want to register a motor vehicle in the Motor Registrar Department with the Commissioner General of Motor Traffic, then you should obtain a TIN number and you should provide that TIN number to the Registrar of Motor Traffic. To renew the license of a motor vehicle, if you want to renew the license, then also you need a TIN number. To register a land or title to a land, if you want to purchase a land, after purchasing that land, you are going to register it in the land registry department, then they will request you your TIN number. So you should obtain a TIN. To register a business, to transfer shares of a company incorporated in Sri Lanka by the transferee and transferor. So if you want to transfer shares, transferor and transferee should obtain TIN. To obtain a credit card, then also you should have a TIN number. Why do you obtain a TIN? So it is a must. It is a legal obligation of these persons to obtain a TIN. Without obtaining a TIN, you cannot do these things. Therefore, obtaining a TIN is a compulsory, and you can check your TIN number through e-service, by entering into e-service Inland Revenue website. Then you can see whether you have a TIN number, because without knowing you, IRD can open a TIN number to you based on the details available. With the information available in the IRD, we can open a TIN number. Therefore, you can see whether you have a TIN number or not in the department. Without going to the department, you can check it through the website, through the IRD website. So from 104 to 111, we have a specific provisions for issuing rulings. So rulings can be divided into two types: public rulings and private rulings. So from section 104 to section 111, you can see provisions with regard to rulings. So what are the public rulings? Who can issue that public rulings? CGIR means Commissioner General of Inland Revenue, can issue the rulings setting out CGIR's interpretation of application of this act. That means when you are reading the act, one can understand one provision in one way, the other one can understand the same provision in different way. So we call it an ambiguity. So that kind of ambiguities can be available in the act because there are a lot of provisions. Some provisions are very similar. Some provisions may have some ambiguity. Some provisions may be very clear. So if there is an ambiguity, there may be several meanings for one provision. Then to achieve consistency in the administration and provide guidance to the general public and officers, Commissioner General can issue a public ruling. That public ruling shall be binding on the CGIR until it is withdrawn. That means if there is a provision and if it is not clear, then Commissioner General can explain what is the Commissioner General's interpretation on that section. So it is binding by the Commissioner General because she is issuing the ruling. So it is not binding on taxpayers. So they can act in different way, but if there is revenue leakage because of that interpretation, it should be borne by the taxpayer. Then what are the private rulings? First one is public ruling. It is issued by the Commissioner General. It is Commissioner General's interpretation. Then what are the private rulings? Private rulings also issued by the Commissioner General, but to issue that kind of public ruling, she has already formed an interpretation committee. Actually in the department we have an interpretation committee. That committee issue public rulings and private rulings both. But in the act it says specifically to form an interpretation committee to issue private rulings. So private rulings should be requested by the taxpayer. Public rulings without requesting by the taxpayers, Commissioner General can issue. So officers also can request to issue a public ruling, or Commissioner General can issue public ruling without any request from the public, that means taxpayers. But to issuance of that private ruling, Commissioner General can issue it. Commissioner General should form a committee to issue it. The taxpayer should request a private ruling from the committee. So there is a specific provision. So there should be an application. The taxpayer should fill all details of in that application and full details of the transaction. Relevant documents should be included. Question should be very clear. His opinion also should be mentioned here. By including all these things, they can request a private ruling from the Commissioner General. So Commissioner General can refuse or accept the application. So if he refuses that application, it should be notice should be issued to the taxpayer. So this is the process of issuing private rulings. Forwarding an application by the taxpayer, then if it is accepted, first of all, forwarding an application by the taxpayer, once we receive it, we should register it in the register. Then the request should be reviewed by the committee whether to accept it or not. If it is accepted, we can move forward. If it is rejected, it should be notice should be issued to the taxpayer saying the reason why we rejected that application. If we accepted it, we should allocate a specific number, and that is the reference number for that private ruling. Then with that specific number, it should be informed to the taxpayer by advising them to make a payment, because 25,000 should be paid to the department to request a private ruling. That charge is mentioned, otherwise there may be taxpayers without any issue they can request private ruling. So because of this value, because of this money, it will be limited. Requesting unnecessary private rulings can be limited. Then after that they have to pay it to the department. After making the payment, it will start the reviewing and issuing the ruling. So after that, it should be noted that ruling should be issued to the taxpayer. After several period, after that, we can publish it in the website by generalizing. That means, since we have a secrecy provision, we cannot publish it in the website as it is. Suppose company A requested a public ruling saying his all details. Sometimes secret details are also there. So they ask him some questions whether we are tax liable or not. So sometimes it can be their future transaction. So with regard to the future transactions also, they can ask from the Commissioner General whether it is tax liable or not. So therefore, we cannot publish it as it is. So once we issue the public ruling, we have to generalize it. If it is relevant for other taxpayers also, we can generalize that issue, not the taxpayer's details. Without taxpayer's details, taxpayer's identification, by generalizing it, we can issue this. If this kind of situation is happened, this is tax liable, like that. That kind of generalized form interpretation can be published in the department website. So this is the process of issuing private rulings. Then from section 120 to section 125, we have record keeping and information collection provisions. So that means IRD in the Act, it says how you should maintain your records and accounts, because all tax liabilities are based on the accounts and records, because all are included in the records. Therefore, taxpayer should keep and maintain all relevant documents and records in the department, in their organization. Specifically, if their businesses are applicable several tax rates that are different tax rates. For an example, if they are having foreign service, that is taxable at the rate of 15%. For all other business activities, applicable tax rate is 30%. So we should know what are the income and expenditure relevant for foreign income, so foreign source. What are the income and expenditure relevant for normal tax applicable part. Therefore, it should be separately identified to be applied that relevant tax rates. Therefore, taxpayer should keep all required documents with their organization. If they have an exempt income, relevant details for that exempt income and relevant expenditure, all details should be kept in their organization. So some commonly incurred expenditure can be apportioned based on their turnover or any method. Mainly we are requested them to apply turnover method to be apportioned generally incurred expenses. An approved accountant shall have prepared the accounts and attest to the accuracy and completeness of the accounts. So this is very important. Then all these documents should be kept at the place of business. And all these records should be keep with them, shall retain with them for 5 years until expiration of the time bar period or some legal proceedings are available, then until it is concluded. So until then all records should be kept. කාටවත් කියන්න බෑ මේක ගිය අවුරුදු දෙකක් මම ඒව විනාශ කරලා ඉවරයි කියලා, because all documents should be kept for 5 years. Then the person can request any language, any means Sinhala, Tamil or English language, to submit their details, to fill the return, to send correspondence. All can be done in these 3 languages. Other languages cannot be used. If they are using another language, they have to translate it into these 3 languages. So taxpayer can determine with which language they are going to communicate with the IRD. So all amounts and values to be provided in Sri Lankan currency. Even though that is a multinational company, they cannot submit documents to the Inland Revenue other than Sri Lankan rupees. Even though they are transacting in dollars, they have to convert it into Sri Lankan rupees and should provide that rupee value. So officers of the Inland Revenue Department can access their premises other premises open to public with or without prior notice. So the Inland Revenue Department officers can access to their business places. So some limitations are there, but in the common way, with the approval of the Commissioner General, officers can inspect their places if it during the normal business hours, so any time authorized in writing by a magistrate. That means normally we have to visit their places in normal business hours. So we can inspect that places, we can go to their business places, office places, factories, any place we can visit. So we can visit there with or without informing them. It doesn't matter. So if we have requested to provide some details, they should submit it to the department. So the Commissioner General, IRD officials has power to request any details from the taxpayer, from the third party with regard to that taxpayers, that details. So from bank, from other organizations, we can request details from any taxpayer. So that authority is given in that. So we can visit their places, we can check their places, we can bring all their documents, maps, plans, title, anything can be taken, then we can be taken into a custody of the Inland Revenue officials. And in addition to that, we can make a copy, seize a record, seize question of any person, open and examine any receptacle, maybe register records and other documents may be found and examine and make an inventory. Anything can be done because we are doing it to ascertain their tax liability, whether the declared amount is correct or not. To check whether it is correct or not, anything can be any action can be taken by the IRD officers. So now I am moving to tax return. So it is from section 126 to 131. So tax return is a specific document. The items should be included in the tax return is already mentioned in the Act. So based on the provision section 127, it says what are the particulars it should be included in the tax return. So IRD has already prepared that document and sent every year we sent it to the taxpayer to fill it in and submit to the department with their signature. Without signing that document, they cannot send. They can send, but we do not consider it as a tax return. So duly completed return should be submitted to the department. Duly completed means with the declaration, with the signature of the taxpayer, with the relevant documents that should be attached with the taxpayer by the taxpayer should be submitted to the IRD. So then only we consider it as a tax return submitted. So if they have not submitted their tax return with the file return, Commissioner General will inform them to submit the return as soon as possible. If it is not submitted, legal action can be taken. So if they need some time to submit their return, taxpayer can request an extension. The Commissioner General can extend that time limit as they requested. So even though Commissioner General can grant extension to file the return, payment dates will not be changed. They have to make the payment. Then the assessment, issuance of that assessment, so it is little bit long. Several slides are there to be discussed, so we can do it in the next day, and the balance part can be done in the next day. So we have a lot of slides in this document, so in the next day we can start it. So up to now I have done administration provisions. If you have questions, you can ask. හරි, ප්‍රශ්න මොන හරි තියෙනවා නම් අහන්න. සිංහලෙන් හරි කමන්නේ, ඉංග්‍රීසි වලින් හරි අහන්න. කැමති ප්‍රශ්නයක් තියෙනවා නම් අහන්න. අපි මෙතෙක් කරපු දේවල් ගැන. ඒතකොට ලබන සතිය වෙනකොට we can finish this presentation. That means administration provisions can be done, can be finished. So I want to do some more additional lectures in the next week because we missed 2 lectures. එතකොට අපිට දෙකක් කරන්න බැරි වුණා. ඒ නිසා අපි තව additional 2 lectures. That means I think we have 3 lectures so far. So we have to do VAT, SSCL, that's all. And if we have time, we can do some more questions. That is what I need. එතකොට administration provisions ගැන යම් දැනුමක් ඔයගලන්ට අවශ්‍යයි. That is why I included this in the syllabus. So මොන හරි ප්‍රශ්න තියෙනවා නම් අහන්නකෝ. ලබන සතියේ ඇඩිෂනල් දවස් දෙකක් කරමු. ඊට පස්සේ ෆ්‍රයිඩේ මම හිතන්නේ ඊළඟ ෆ්‍රයිඩේෙන් අපේ ක්ලාසස් ඉවරයි. ප්‍රශ්න නැද්ද? Okay, then we can stop the session without any break. We did the lesson today because we have very limited time period. So thank you very much for all of you and good night.
Madam.